Could Bitcoin prices fall if a spot ETF gets approved? The data suggests they might. Analytics provider CryptoQuant estimates Bitcoin could drop to $32,000 in February if US regulators greenlight a Bitcoin spot exchange traded fund ETF. Why would prices fall on seemingly positive news? The answer may be sell the news behavior and an overcrowded Bitcoin trade. Welcome back to Digital Financial Freedom. Let's get into it. With Bitcoin up 60% amid ETF anticipation, traders are heavily positioned for approval. However, historically prices often peak, then decline once major events occur. So while spot ETFs may attract inflows long-term, their approval could first trigger profit-taking and deleveraging, especially with futures premiums and funding rates stretched. The question is whether enough new money buys the dip. If not, Bitcoin's rally may falter on the very news traders expect to fuel it higher. Applicants for spot Bitcoin ETFs have hosted around 32 meetings with the SEC this month to discuss changes to their filings. The crypto community sees this as a sign of imminent approval between January 8th to 10th, with analysts giving 90% odds of green lights. Even BlackRock, one of the largest asset managers vying for an ETF, said it would commit $10 million on January 3rd. The belief is Bitcoin will rocket to new highs as investor money floods in post-approval. However, analytics provider CryptoQuant argues the opposite may occur. The long-awaited event instead triggering a mass sell the news exit. Signs of an overcrowded trade abound, with stretched futures premiums and record funding rates indicating heavy front-running already. CryptoQuant warns built-up leverage could unwind quickly if the verdict date becomes a synchronized profit-taking catalyst. Rather than spur buys, approval may first give overexposed traders their long-awaited chance to sell. Bitcoin prices may see a downturn if an ETF is approved. According to data provider CryptoQuant, Bitcoin could fall to around $32,000 in February if regulators greenlight a spot Bitcoin exchange traded fund ETF. CryptoQuant said unrealized profits for Bitcoin traders have reached levels that have previously come before major price corrections. This suggests traders may sell the news if an ETF is approved, taking profits which could lead to a drop in Bitcoin's price. Sell the news refers to the tendency for asset prices to climb on positive expectations prior to a major event, only to fall after the event occurs and expectations diminish. So while an ETF may be positive for Bitcoin in the long run, its approval could be met with traders selling out of their positions to cash out, causing a temporary price drop. This is because experienced traders often capitalize on overcrowded long positions, trapping those using leverage and forcing them to close out their positions as prices decline. While an ETF may bring more institutional inflows over time, its approval could be temporarily met by traders selling to lock in profits. Short-term Bitcoin holders are seeing unrealized profit margins around 30%, which historically has come before price corrections, CryptoQuant wrote. Also, short-term holders are still spending Bitcoin at a profit, while rallies usually come after short-term losses are realized. CryptoQuant estimates Bitcoin's price may decline to $32,000, which is the break-even price for short-term holders. Capriol Investments said conservative portfolio management makes sense leading up to any ETF approval that could trigger volatile selling. With Bitcoin up over 60% since ETF mania began a few months ago, and with every man and his dog on X.com expecting an approval on or around 10 January, we must start to anticipate much larger volatility events up and down in this region. Risk today is substantially higher for long Bitcoin positions than it was just a few weeks ago, wrote Capriol Investments. In Bitcoin's history, sell the news moves are common. In 2017, BTC topped out at $2,000 after CME listed BTC futures, and in 2021, Bitcoin peaked at $65,000 following Coinbase's IPO before falling. Bitcoin is currently trading around $450, having started 2023 at $16,000. Daily trading volume remains steady at $80 billion according to CoinMarketCap. K33 research analyst Vettel Lunder suggests a 75% chance that ETF approvals become a sell the news event versus a 20% chance of approval, inflows boosting prices further. Lunder gave a 5% probability that ETF filings are denied outright. Decisions are expected between January 8 to 10. Everything points to traders being heavily exposed ahead of the ETF verdict. Derivatives show massive premiums built up during Bitcoin's last 3 months of steady gains, wrote Lunder. A sell the news drop could become self-fulfilling, with many short-term players targeting the event for profit-taking. Lunder puts 75% probability on a post-approval sell-off versus 20% odds of enough inflows to offset selling and boost prices further. Despite signs suggesting imminent approval, Lunder still sees a 5% chance ETFs get denied. Even if approved, the crowded Bitcoin trade looks vulnerable. Signs point to an overly crowded Bitcoin trade ahead of potential ETF approval. Futures premiums on the Chicago Mercantile Exchange have surged to 50% annualized. This shows institutions continue building sizable long exposure. Betting regulators approve a spot Bitcoin ETF. Over the last 3 months, Bitcoin open interest rose by over 50,000 BTC, likely from traders front-running expected ETF approvals. At current premiums, maintaining CME exposure costs 1 to 2% every month, acceptable temporarily before a key event, but unsustainable long-term as cheaper alternatives emerge, said analyst Vettel Lunder. Meanwhile, funding rates on retail exchanges hit 72%, annualized amid Bitcoin's latest spike. Shorts don't want to enter with the ETF verdict a week away, increasing premiums and making longs costly, Lunder explained. Still, relentless leverage buying could trigger long liquidations if the ETF news disappoints. The overcrowded long side sets up well for selling pressure if approvals become a sell the news event. Savvy traders may capitalize, taking profits, which could trigger a price pullback. Bitcoin gained over 5% in the last 24 hours, surpassing $45,000 amid growing anticipation for a US spot Bitcoin ETF approval. Bitcoin currently trades around $45,269 according to the block's data. Analyst Vettel Lunder says Bitcoin spot ETFs have certainly been front-run by traders betting on approvals, but whether expectations built too much or too little steam depends on actual inflows if the products launch. Flows should come from inferior futures ETFs too, but the critical factor is at least $2.3 billion in net new inflows during January, Lundy added. Lunder expects Bitcoin's current rally to peak around the ETF verdict date due to sizable profit-taking from short-term traders and unsustainable premiums. However, longer term, he sees inflows into potential spot ETFs combining with April's halving supply shock to compound gains favorably as 2023 progresses. For now, the overbought trade may falter on the news. Just because the market expects some positive news doesn't mean prices will keep rising once it hits. In fact, Bitcoin's history shows sell the news drops are common, like when it peaked after the 2017 CME futures launch and the 2021 Coinbase IPO. The same setup is emerging around a potential US spot Bitcoin ETF approval. Analytics firm CryptoQuant warns Bitcoin could now plunge to $32,000 if an ETF gets approved, despite most traders betting heavily on more upside. That's because leveraged longs may rush to take profits rather than hodl, creating cascading declines. So while a spot ETF should attract institutional inflows long-term, its approval could spark the opposite short-term, mass exiting by speculative traders. And with funding rates and derivatives premiums overstretched, their unwind could get messy. The moral is markets often dash the highest hopes with rude awakenings. Big gains entice risk that can swiftly reverse. Will history repeat itself if a spot Bitcoin ETF gets approved? Or will new institutional inflows prove enough to break the sell the news tendency this time? Let me know in the comments section. And if you liked this analysis, be sure to like and subscribe to Digital Financial Freedom for more insight on crypto markets and how global events may impact Bitcoin price action going forward.